Is our keynote speaker, Dr. Mark Mobius, Chairman of Mobius Emerging Opportunities Fund, a world-renowned investor and pioneer in emerging markets, whose insights have guided financial thinking for decades. Please join me in welcoming Mr. Chavan Bhogaita and Dr. Mark Mobius to the stage.
Hello. Hi, good morning. Morning, Your Highness, Your Excellencies, distinguished guests, ladies and gentlemen. Very good morning to all of you, and thank you very much for joining. So look, if there was a Hall of Fame for emerging markets investors, Dr. Mark Mobius would definitely be in that Hall of Fame. He is one of the forefathers of emerging markets investing. I almost said godfathers, but forefathers will do. And he's one of the most respected voices in the EM space. So as such, my challenge here today as moderator is not what are we going to talk about. My challenge is how do we fit this into the short window of time that we have available. So we'll do our best. What I'd like to say to all of you is we will be opening up for some Q&A. So please do keep your questions ready. We'll try and get as many of your questions to Dr. Mobius as we can. And with that, let's get started, and we will try and get through as many topics that are relevant as much as possible. Good morning, Dr. Mobius. Thank you very much indeed for joining us.
Good morning. By the way, I just want to say that it's an honor to be speaking before Your Highness and distinguished guests, and I think we can have a lot of fun with this session because there's so much going on in the world today that is so vital to all of us.
So, in the opening addresses, we heard a recurring theme of a world of uncertainty. To what extent in this world of uncertainty is that uncertainty and volatility here to stay, particularly in a Trump era?
Well, first of all, let me say that we love uncertainty. If we're in a market, uncertainty is a great friend if we know how to behave. In other words, when everybody is going in one direction up, then you hold back and wait until things quiet down or things come down. So uncertainty should not be considered an enemy but a friend. And I think the critical issue now is not so much the uncertainty, but the speed of uncertainty, the speed of change. Because we are now in a digital world where things are moving at a much, much faster pace than ever before. If you look at the whole issue of AI and artificial intelligence, you know, there's nothing artificial about artificial intelligence, and there's nothing intelligent about artificial intelligence, because what you're basically dealing is with data, existing data, that's being regurgitated, being analyzed, being moved around at a faster and faster pace. And I see in my own lifetime the incredible changes that have taken place as a result of this incredible speed of change. I remember when I was writing my PhD at MIT, and in those days there was no internet, there was no Word, there was no computers, laptop computers, and I had to do the thesis on a typewriter, an electric typewriter. And of course today, many of the young people, you say, you know, I had to do my thesis on a typewriter. He said, what is that? What is that typewriter? And today, of course, you could do your thesis using AI, which is really a regurgitation of existing data. So in many ways, you know, people talk about inflation. We are actually in a deflation when it comes to delivery of services and goods, which is quite remarkable.
So let's explore a little bit the point you made about, from an investor standpoint, that uncertainty and volatility is actually your friend. From an EM investor standpoint, to what extent has that volatility been something that you've been able to take advantage of over the last few years?
Well, because, when you're a professional investor, and I was running the Franklin Templeton Emerging Markets Funds for many, many years, the problem is that if you're running money for other people, they want you to be running. They want you to be invested. So as the president of Citibank once said, if everyone is dancing, you have to dance as well. And that's when the problem begins, because you have to be invested, you have to be in the market. And generally speaking, it does make sense to be in the market because bull markets last longer than bear markets.
Yeah.
And bull markets go up more than bear markets go down. So it makes sense for you to be in the market. But it also makes sense for you to get out when everybody is crazy and being so optimistic about a certain area. And in some respects, we're seeing that now. We're seeing a great deal of optimism about AI, about technology in general.
Yeah.
And I think we have to be careful because the markets have really moved up at maybe too fast a pace.
Okay, so look, we'll come back to that a little bit later on. Let's turn to emerging markets specifically. It's something that I'm sure everybody here wants to hear your views on. Let's start with the elephant in the room, which is US-China. So US-China relations, how do you see this kind of playing out in the near to medium term?
Well, first of all, I think the U.S.-China relationships will continue to be contentious because the U.S. wants to maintain its hegemony around the world. But China is saying, wait a minute, we're the fastest growing, or one of the fastest growing countries in the world. We're big, we have better infrastructure than the U.S. We should be up there among the first. But you must remember what made China what it is today. It wasn't communism. It was the market economy.
Yeah.
Deng Xiaoping, when he said, I don't care if the cat is black or white, as long as it catches the mouse. And he also said to be rich is glorious. But basically what he was saying is that we are going to allow a market economy to thrive. And that's really what's built China today, the market economy.
And facilitated that rapid
That's
growth.
right. And now, I believe with Xi Jinping, we're going to be seeing a turn back.
Yeah.
In other words, I think Xi Jinping, if you read very closely what is happening in China, I think Xi Jinping is beginning to lose power. He is beginning to have to succumb to the market economy and move towards a more market-oriented economy, which is going to be very good for China and going to be very good for the world because it means that China is going to become much more productive even than it was today. So U.S. has got to watch out because if China moves in that direction more towards a market economy, you're going to see an incredible change taking place.
Okay, and I'm sure that there may be some audience questions on China later on. Let's shift, if we may, to India. Your views on India are fairly well documented, but for the people in the room, could you give them some perspective of how you look at India from the investment perspective right now, and where do you see opportunity?
From a longer-term point of view, we're very bullish on India for a number of reasons. First of all, India is having the largest population in the world. You must remember that China's population is actually shrinking. It's probably not 1 billion, it's probably more like 900 million, 800 million, whereas China, you're looking at a good 1.2 billion, number one. Number two, average age. Average age in India, about 26, China about 36, 37. Yeah. So that's a very, very important aspect because the young population means more growth. And if you look at the growth numbers, China is what now, 4% maybe growth? Yeah. But India is more like 6 or 7. But that is going to continue going forward. And what is most exciting about India is that you have this incredible variety of cultures within this country.
Yes.
I like to call India the United States of India, because you have these differences around the country, which is a very rich cultural heritage, which is going to be very good for them going forward. And you can see what's happened with India's software industry. It's an incredible big industry, and I think going forward, as India liberalizes, and by the way, that's going to be the big challenge for the government to reduce the bureaucracy. Once they are able to do that, you're going to see a surge in manufacturing, particularly in high-tech goods and services.
So aside from those areas, which other sectors are you looking at in India? Is it infrastructure? Is it financial services? What are the areas where you see kind of significant growth near to medium term?
Well, obviously, the consumer sector, because the consumer market is growing at a very fast pace as per capita incomes go up, and as people move to the cities, the urbanization of the society is going to be increasing very rapidly. But I think more importantly, down the road, I believe the hardware industry for electronics, electronic hardware, high-tech hardware, and chip industry. China, of course, is a big leader in chips, along with Taiwan, but going forward, I believe India will begin to adopt that role, high-tech manufacturing.
And almost rival China in that sense?
Exactly. Rival China and rival the US.
Okay. All right. In the interest of time, let's just shift geography once again. There's a lot of people, possibly in the room and otherwise, looking to take advantage of the opportunities in Africa. But Africa is a huge place. Are there any pockets within Africa that you believe are most interesting from an investor standpoint?
Yeah, it's very interesting when you look at Africa, because if you look, for example, at Morocco, they've done an incredible job in growing the economy. Egypt is another country that we have to watch, which I think will begin to be more significant. And the interesting thing about Africa is, because of the rise of the internet and IT, you're going to see pockets within each of these countries of Africa growing and not being noticed as much. In other words, you're going to see a lot of outsourcing to African companies within different countries, but it won't be noticed as part of the overall growth of a particular country.
Yes.
So I believe that that's what we got to look at going forward. And of course, you have to pay attention to the big countries, Nigeria and South Africa, which are going to be coming up as well.
So I read that South Africa has just secured a bunch of financing from the World Bank to develop their main cities. To what extent do you feel that there's sufficient FDI flowing into not just South Africa, but other countries in Africa to enable them to grow and potentially reach the full extent of where they can get to?
It's been very slow. There hasn't been enough opening up of these countries and enough of the infrastructure.
Yeah.
The problem is, if you are looking at investments, many of the large investment firms ignore many countries because they're too small, not enough money to go in, which is why an association of African countries, which is now taking place to some extent, would be the answer. In other words, you have groups of African countries bringing in capital in a integrated system.
Yeah. Okay. Let's switch gear a little bit and talk about specific asset classes from an EM standpoint. Let's start with EM equities. Any specific views on EM equities, or where your fund, the Mobius Emerging Opportunities Fund, are currently focusing in the EM equity space?
A very good question. Of course, I grew up with emerging markets, but I soon discovered that focusing only on the stock markets of emerging countries was not enough.
Right.
Because there was so much activity in the American market. The American market is the largest in the world. I think the American market capitalization represents maybe 70% of the world's market capitalization. Okay. So we began to discover that, hey, there's so many companies in America that are really emerging market companies. Let's take Apple. where does Apple get all of its equipment,
Yes.
all its products? China, Taiwan, et cetera, et cetera.
Yeah.
Where does Procter & Gamble sell most of its goods and services? Of course,
Yes.
emerging countries are an important part of that. So we began to pay attention to these companies, not necessarily the big blue chip companies, but a lot of smaller companies that are really driving most of their supply and most of their markets in emerging countries.
Right. Okay.
And that's the reason why we call it emerging opportunities rather than emerging markets, because we said, let's open up the world.
Yeah.
We look at all of the countries around the world.
So you don't have to be playing directly in the stocks based in those EM countries, but as you said, in companies that are actually active in that space.
Exactly.
Okay, interesting. Let's switch to fixed income. Does the same logic apply, or in fixed income, are you taking a much more focused approach in terms of EM countries?
Yes, so again, with fixed income, the same things apply to some extent, because if you look at the global market, of course, the market for fixed income is big in the US, but it's big in Europe and other parts of the world. But more and more, you're going to see fixed income products coming out of these emerging countries, whether it be in Africa, Latin America, etc. The problem facing these countries, of course, is the one of confidence.
Yeah.
You take Argentina, for example. Many of us thought that Malay's reforms were going to take place, and as you know, they've been held up. So to the extent that these countries are able to provide a stable environment, then the fixed income market will be very big and will grow.
Yeah. Okay. Look, I'm conscious that many of the people in the room, myself included, are based here, yourself included. Give us some perspective on how international and global investors view this region. And by this region, I mean the GCC or MENA. How do they see this place? Do they continue to see it as one block and fail to differentiate between the countries, as has been the case for many years? Or are they starting to actually come over here, get a much deeper understanding, and be able to differentiate and hence find the right opportunities? So what's the global view on the region?
Well, I think the global view on the region is changing very, very rapidly. In my case, I was living in Singapore for about 10 years. I lived in Hong Kong for about 10 years. I lived in Asia for almost 40 years. And then I discovered Dubai. And I opened up the Franklin Templeton office here, and I decided this is where I want to be.
Yeah.
So this is really a great place to be, as far as I'm concerned.
But from a asset manager's perspective, when they look at the GCC or MENA, do they still have major concerns such as governance, transparency, all of these things that used to be the case? Or have they kind of become a lot more comfortable with the story in this region, hence willing to put much more money to work?
It's really interesting. I just got an email from the chairman of one of my funds I used to run in the UK, and she said, I'm moving to Dubai because I'm fed up with the taxes in the UK.
Yeah.
And I think more and more people are discovering the UAE, this region, and changing their ideas about what's happening here.
Yeah.
So I believe that this is rapidly becoming a center, not only for finance, but for innovation. And I can see it that, well, I've been here for 5 years. Of course, I opened up the Franklin Templeton office about 20 years ago when there was nothing. None of this was here. And I see the leadership and planning and the vision of the rulers here in Dubai and the UAE in general have provided an example for the rest of the region.
Yes.
So you can see other regional players are trying to catch up, trying to change and improve. And that is going to be very, very important going forward. So I see the Middle East is becoming a very, very big financial center, rivaling London, New York, or any other part of the world.
Okay, so when financial centers like the DIFC and ADGM in Abu Dhabi talk about being the fourth time zone in financial markets, you think that's a very real possibility?
Definitely, it's happening now.
Yeah.
We're in the midst of that.
Yeah.
And for example, in our case, we are working from here. We are able to travel anywhere in the world.
Yes.
We're in a very wonderful tax environment. I personally love hot weather, so I have no problem
Yes.
with that. So I think more and more people are going to be coming to set up here.
As a group of people that are based here in the region, what more do we need to do to get greater allocation of funds from EM investors, right? So when we talk about the large institutional EM funds, we as a group would probably agree that we're still a very small percentage of their overall book. How do we get greater allocation? What more do we need to do?
I think continue what you're doing. In other words, continue the same programs, the same environment, this tax-efficient environment, the fact that you have an infrastructure, which is very good, and of course improving as we go. I think you just have to continue doing the same thing you're doing, and you're going to see growth taking place. The latest figures I understand, I was talking to someone from the tourism ministry, and I believe they were estimating that this year 200,000 new residents will be coming into Dubai alone,
Yes.
not to mention
Yeah.
other Emirates. So this is really amazing. And of course, these people are people with money, with companies. So I think you have to just continue what you're doing.
So I was speaking at a conference in Toronto earlier this year, mainly with Canadian pension funds, huge AUMs, minuscule, almost zero allocation to this region among those Canadian pension funds. And I realized in my discussions with them that their level of awareness of this region was still very, very low. When I started showing them some slides about the Middle East fixed income market, how developed it is, blah, 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 it was all kind of new to them. So to what extent does the region need to continue pushing awareness in all parts of the globe?
No, I think that makes sense. I think they have to, and I noticed that a lot of the officials, government officials here, traveling around the
Yes.
world, telling the story
Yes.
about what's happening
Yeah.
here. But there's nothing better than seeing what's happening. And I know that many of the people that come here that I know are shocked and surprised to see the degree of development. And that's a real eye-opener for so many people around the world. And I
Yes.
think more of that has to be done.
Yeah.
I noticed that more Chinese are coming in, which is very good news,
Yes.
because they bring with them a lot of know-how.
Mm-hmm.
And of course, the Indian community is very, very
Yes.
large here. So when you consider these two largest countries in the world,
Yeah.
you don't need many more people to come here.
So we're on the right path. Just keep doing what we're doing.
Exactly.
Okay. Separate question. Given the search for yield, to what extent do you feel EM investors are going to be more willing to look at local currency investments rather than just hard currency?
See, the problem with local currency investing is liquidity and access.
Yeah.
One of the problems we have when going around the world is that, okay, you can go into a country, how do you get out? How do you get the currency out?
Yeah.
And that is an issue that is very, very important. The degree to which that you have a free-flowing, open liquidity
Yes.
market will attract more and more people because they will feel confident, okay, if I put money in, I'll be able to get it out.
Yes.
And I think that is the key. And if you look around the world, you'll see, for example, if you go to Hong Kong, you invest, you know that you're going to be able to get the money out because of the
Yes.
currency
Yes.
will be there. So I think the fact that the US dollar now is dominant around the world doesn't make sense. It makes sense for people to have a fixed exchange rate similar to what you have here,
Mm-hmm.
where people can rely on the long-term viability of the currency.
Okay. So turning back to Mobius Emerging Opportunities Fund, What are some of the big themes that you guys are currently looking at across EM? So just if we talk thematics, what are the big things that you guys are looking at now and into 2026?
Of course, the big theme is technology. We are looking at companies that are at the technological forefront globally.
Mm-hmm.
In other words, companies that are really doing, creating new products and services that are technologically advanced.
Right.
Now, it doesn't make any difference whether they're in consumer products, whether they're in manufacturing, or whether they're in travel, whatever it is. The degree to which they're using technology to improve their efficiency is what we're interested in. We want to be able to find companies that are doing that, because we know that their return on capital will be much improved, and their earnings growth will be better. So that is really the big challenge, to find companies that have those characteristics. And one of the key factors that we look at is return on capital or return on assets, because you'll find that companies with a good and improving technology have a high return on capital, which is very critical.
Fair. Again, we're here in Q4, looking ahead into 2026. What are the things you're most concerned about as an EM investor? What's not necessarily keeping you awake at night, but what are the kind of big things that are on your radar in terms of we need to look out for that?
The biggest, I would say, the biggest concern is bureaucracy.
Bureaucracy in what sense?
The paperwork that is involved in getting things done.
Okay.
And I have to blame the U.S. on that, because, the U.S. with this KYC and all the other regulations, which, by the way, have been copied by the Europeans, have created a real mess in terms of paperwork. And I hope that the governments in this region do not, of course, they're in some ways forced to follow this, but the degree to which they can reduce the paperwork would be a big plus. So this is a big concern from our point of view.
Okay. And look, I'm going to come to some audience questions in a couple of minutes, so guys, please keep some questions ready. You're coming out with another book entitled The Digital Currency Revolution. So look, everyone here, I'm sure, is familiar with digital currencies per se, digital wallet. There's a lot of talk. To write a book on it, you must have some strong views. So give us, in a nutshell, a couple of minutes, a synopsis of your views on this digital currency revolution, as you call it.
Yeah, we are in a digital currency revolution. There's no question about it.
Well, why is it a revolution?
Well, in the sense that we're foregoing physical currency. In other words, the bills and paper bills or coins and so forth, and now it's all digital. I mean, for example, I carry my cell phone around with me, and I pay everything with that cell phone, with Apple Pay.
Yes.
And if you go to China, it's quite remarkable. They don't accept any cash for most places at all. For most places, it's all digital. So we are now in a digital currency world, or increasingly so. Of course, some countries. It's interesting. Recently, we were in Japan. And Japan is actually behind this trend. They use physical yen more and more, or they have been using physical currency, but they're getting away from that. Now, companies around Japan are beginning to switch into a digital mode. And therefore, by the way, one of the investments we've made is in a consulting company in Japan, and they're thriving because they're helping companies to make this transition.
To digital.
Yes, to digital. So we're seeing this trend. But the interesting thing in writing this book with my colleagues was that we were first interested in central bank digital currencies. Mm-hmm. And I was really shocked to find out that almost every central bank in the world is looking at digital currencies. To issue their own.
Yes.
Why is that? Because they've been challenged by Bitcoin. They've been challenged by cryptocurrencies, so forth. And they realize that if they don't move they're going to be
Yes.
in trouble. They'll be excluded. So this is a big, big, big change that's taking place. And in the book, we look not only at central bank digital currencies, which there are big variety, different ways of looking at it, but then there are also the Bitcoin and the other coins
Yes.
and other forms of digital currency, which are becoming more and more prevalent.
So you've explained that this revolution is happening. It is the way to go. Is it a good thing?
Oh, it's amazing. It's incredible.
Just because of convenience, or
But it also means a revolutionary change because you have a whole generation of young people who are mistrustful of central banks and mistrustful of currencies generally.
Yeah.
And that's the reason why the popularity of Bitcoin has surged to such a degree, because people are saying, I don't want to be subject to the inflation created by central banks, you know, the printing of money.
Yes.
And therefore, I'm going to go into Bitcoin to save, to preserve my assets. Now, whether this is good or bad, but that's the reality of the young generation that really mistrust.
Should we ask them?
Yeah, yes.
Okay, so raise your hand, please, if you feel that digital currency is the way forward. Really? So actually, I was expecting the majority of the room to put their hand up. So the inverse of that, raise your hand if you think cash is king. Oh, come on, there's some people like shy to put their hands up. Cash is king. Okay, I agree with you, sir. Okay, very good. Well, look, that's an interesting dynamic.
I think most people in the audience are using digital currencies.
Yes, but the fact that
In
not
the
all
sense
of
of
them put their hand up
Yeah,
for the first
exactly.
question, right? So, okay, let's see. Okay, let's switch over to you guys. Raise your hand if you have a question for Dr. Mobius, anything related to the topics that we've discussed, or anything that you feel we haven't discussed so far that you would like us to explore. Raise your hand and we'll get a microphone to you. Come on, we're among friends, no need to be shy. There's one out there? Okay, yes, thank you very much indeed. Can we get a microphone over here, second row? Thank you very much indeed. I'll pay you later.
Thank you, Chavan, and thank you, Mr. Mark. So my perception, my belief is anything which is complex has the risk of falling like a house of cards if sentiment was to ever change. We saw this with CDOs and CLOs in the early 2000s, yeah? Do you think the current digitization and this digital currency thing has that risk? Because these are complex situations and complex products in a way.
Sorry, could you repeat that?
The digital currency is a complex product compared to simple cash. And if the stable coins, when they are linked to a particular currency assets, also has its element of complexity. Do you think they could fall like a house of cards if the sentiment was to ever change?
Yeah, interesting question.
Yeah, very interesting question. And the answer is yes, they could. There are many arguments against these coins. Bitcoin, of course, has been attacked by many scholars, many people, despite the fact that so many people have apparently become multi-millionaires by buying a Bitcoin. But there are the arguments of people saying that it's a house of cards and it will crash in one day, and that could happen. There's no question about that. The so-called stable coins are really based on the belief that the backing, whether it be gold or US dollars, is there. And that's the big issue. Without no central authority to check and do an audit of the backing for these coins, you have a real problem. There's a chance that people will, and of course, this already happened. There have been many cases where these coins have been issued. People thought that they were backed by gold or by dollars or by some currency, and then the thing crashed, the money is gone, and people lost a lot of money. So the answer is yes. You have to be very careful with these stable, so-called stable coins.
Thank you. Any other questions? Yes, sir.
Here's one here.
Yes.
So one of the big changes underway increasingly palpably is the demographic transition, which today is a global demographic transition. The population around the world is aging much faster than we were assuming even sort of 10 years ago. And those numbers are very evident also in this part of the world. Fertility rates have dropped, and the elderly people are the fastest growing population segment. How do you view the emerging opportunities around this accelerating demographic transition in emerging markets?
That's very interesting.
Yeah, that's a great question. And it's very close to my heart because I'm getting near the use-by date. I mean, the aging situation is global. There's no question, particularly in the developed countries, people are getting older. And by the way, one of the things that we're looking at in terms of focus on where to invest, and that is in the healthcare industry, whether it be in pharmaceuticals, whether it be in hospitals, and so forth and so on. This is going to be a big growth industry going forward. So I would say, in answer to the question, this is a big area of growth going forward. Now, of course, as I mentioned, you have a place like in India where the population is young, but that population will be aging as we go forward. And of course, if you look at places like Japan, US, Europe, etc., the population is aging and there's an incredible demand for health care going forward. And of course, the biggest causes of death are heart disease and cancer. And I'm amazed by the strides and the improvements that have been made in the treatment of cancer. Recently, I was in Houston, Texas, at the MD Anderson complex where they're treating cancer patients. And it's a huge facility with so many patients. So I believe, yes, it's going to be a big industry going forward.
Thank you. Sorry, could you get the microphone over here on the front row? Yes, thank you.
Right. Thank you so much for most exciting conversation. Just two quick reflections on what you said. The first is your very interesting view about uncertainty, and that you see the good out of it, and you describe that. But if you are a regulator, like Mervyn King, for instance, the former head of the Bank of England, he may not necessarily share this view from a regulator's perspective or a supervisor's perspective, what he called with K as radical uncertainty, in which the unknowns are more than what he can really do and control for market stability. So is there a kind of a holistic approach to that view, or is it you spoke more about uncertainty from a market perspective and trade? And finally, on your point on Africa, when Chavan asked you about Africa, I'm happy that you picked one of the two countries I'm familiar more with, Egypt and Morocco. But what about the rest of the 54 countries, if you like to give us some insights, as you mentioned about Egypt and Morocco in Africa? Thank you.
Yeah, I think the point that you made in your talk, by the way, about the uncertainty regarding the dollars were very well taken, because there was no question, as you mentioned, the pound sterling used to be the preeminent currency around the world, but it's no longer. And the US dollar could be gone and replaced with something else going forward. As regards to Africa, the problem, as I mentioned, is that many of these countries are too small to attract large volumes of investments. So there has to be a different mechanism to penetrate these countries and get the right money into these countries. By the way, I sponsor a scholarship at Cornell University in the US for people in these countries around the world, emerging countries around the world, for new ideas, new businesses. And some of the best ideas come from Africa. I was amazed. So there's incredible talent in these African countries, but we have to focus on a much smaller structure so that we can bring these countries and these companies up into the world. And that's the reason why I was thinking that if you could get a combination, and of course this is already happening, some countries in Africa are getting together into a form of union so that we can have a much larger market for these countries that come together and maybe have a unified market and a unified currency, which would be very, very good. And I think the work that you're doing is very helpful in this regard.
Thank you. Thank you, sir. Yes, over there, please.
Good morning, and thank you very much for your contribution. We're talking about digitalization and, of course, the rapid advance of the technology in the markets, in the economy, in our daily lives. But we're also talking, and it's a theme of this conference, about sustainability. If we know, and we all know that digitalization consumes massive amount of energy, and of course, then we're going into the sustainability topics that everyone is looking forward to, and everyone is looking for the net zero impact. How can we balance that advance in technology, which consumes a lot of energy, with the need to have less consumption of carbon dioxide? How, in your view, how do we balance that, those two targets, if I can say like that?
You know, that's a very, very important question and very key. The good news is that more and more of these companies are aware of the need for sustainability. And the driving force is not necessarily sustainability for itself, but for an enhancement of their efficiency and profitability. So many companies now realize that, hey, if they don't create a sustainable environment for their products and services, they're going to be in trouble going forward. So we're seeing this happening almost naturally within the context of individual companies. But the answer at the end of the day is going to be technology. I think the point that you're making, underlying the question that you have, is if you look at AI today, the incredible amount of power, electric power required to drive these systems is unsustainable, that we cannot continue at this path. And the answer, of course, is to improve the efficiency of the chips that were being created. The degree to which the chips can become more efficient and less power consuming will be driving the sustainability and reducing the amount of power required to drive these chips. We're not there yet, and that's the reason why you're seeing this incredible growth in production of power plants to supply power to these chips. And by the way, I think this is something we got to be careful about, because I believe that chips will be designed that use less power and produce more data. And therefore, the need for this tremendous amount of power will probably not be sustained going forward. To give you an example, as you know now, we have artificial diamonds. Now, if we use diamond materials in chips, instead of silicon, we use diamonds as the base for the chip. This becomes much more efficient, less power consumption, greater transmittability, and this is the kind of technological change that will be taking place. So we have to keep an eye on that whole space, because we cannot continue to produce power at the rate that we're doing now.
Okay. Yes, Rakesh.
Hello. Dr. Mobius, thanks very much for your views, very insightful. I have a question around the bond market. If I'm not wrong, we have seen around $6 trillion of bond issuance globally this year. And even if you look at our region, there is a significant growth in terms of hard currency bond issuance. And within that, especially debt growth at sovereign level is growing a lot, including we have the refinancing risk at US. So what is your view on the bond market in general, this significant amount of growth in bond issuance? And the second question around that is, for example, if you look at Saudi Arabia, they have, there is an incredible amount of bonds issued from Saudi Arabia, primarily to refinance its deficit. And Saudi Arabia government has made a significant focus towards raising debt from private credit. And there is a growing focus on private credit. So what is your view on private credit market, and what is your view on the significant growth of debt globally, especially at sovereign balance sheet?
Thanks.
He's asking about the growing debt.
Yeah, growing debt, increased bond issuance, and then private credit.
Well, you know, the answer, unfortunately, for a lot of people that have big debt is just to print more money. And that's, of course, what the U.S. has the luxury of doing. And that's the danger that the U.S. dollar is facing. Because if the U.S. government keeps on printing in order to pay its debts, eventually the country will be in big trouble with big inflation. And we're already seeing that. During COVID, we saw incredible increase in money supply. The money printing went up by 20-30%. And of course, 1 year later, you have the results, inflation. So I believe that there will be no end in sight to issuance of more bonds, more money being printed, until we get to a point where the credibility of these debts have become lower and lower. We're in a market now where a lot of people will speculate on these issuances, and they go short, they go long, they have all kinds of other instruments they can use to make money with these, the fluctuations that you see in these bonds and country debts. But at the end of the day, you know, it's going to end at one point. So we have to be very careful about that. By the way, very instructive is the experience of Argentina. You know, Milei, when he came in, said he was going to dollarize the economy. What does that mean? It means you have to eliminate the central bank. You get rid of the central bank, tie the peso to the dollar, and you use dollars only. But he didn't do that. So you can see the incredible fluctuations in the market. It's a speculator's playground because the market, the stock market surged up, crashed down, surged up again, crashed down. So you have this kind of situation which is all about credibility. The degree to which a country can create credibility will really determine the degree to which they're able to issue bonds and sell those bonds, issue debt generally.
Okay, look, we're almost out of time, but I have a few more questions. Can we do these on a kind of rapid fire basis? Okay, let's do this. On a scale of 1 to 10, 10 being the most bearish, how concerned are you about the global economy during the Trump era?
8.
8, okay. High, medium, or low, the probability of the US dollar being dethroned as the reserve currency globally?
Probably, again, 8. It will continue to be the reserve currency. Is that what you mean? 8 would be the most?
You think it'll remain?
Yeah.
Okay.
For at least the next 5 to 10 years.
Okay. Is gold an asset that people should hold long term?
Yes.
Okay. Given the rapid rise of AI, machine learning, etc., what proportion of people in the room here should be worried about their jobs?
Well,
because look, broadly speaking, we all work in the same kind of industry, right? And we all talk about AI.
No, from what I can see, you got a lot of intelligent people here. they are going to find a way to find something to do regardless of what happens with
So
AI.
they will put the intelligence into artificial intelligence.
And they will find other ways to utilize AI
Okay.
and find an occupation.
Okay. So look, my
So
last
I
question.
mean, it's similar to what you had during the Industrial Revolution.
Yeah.
You know, a lot of people thought they would lose their jobs. Well, yeah, some people did lose their jobs, but they found other occupations.
Yes.
There'll be other things.
Yes.
AI is not going to be a solution for everything.
Yeah. Okay, so look, my last question, and just hear me out on this one. So if this emerging markets thing, dabbling in emerging markets, doesn't quite work out for you, and if you need a plan B in terms of your career path, I think Hollywood would be quite a good option for you, right? So if a Hollywood producer came along and gave you the opportunity to star in a Hollywood blockbuster, which of the following roles would you pick? Option number one, James Bond, because I think a lot of people here would pay to see you as James Bond. Option number two, a superhero of some sort, Iron Man, Captain America. Option number three, Ethan Hunt from the Mission Impossible series. Which one would you pick?
Ethan Hunt.
Ethan Hunt. Well, there we go. On that, ladies and gentlemen, a huge round of applause.